The Bay Area housing market has been on absolute fire. This is not front page news. However, there are some cities in the Bay Area that are starting to show signs of a slowdown. Is Menlo Park one of those cities? Coming up on this Bay Area Housing Market Minute. The latest trend graphics reports are out for the city of Menlo Park. I'm very excited to share that with all of you. But before we go into that data, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the area or the zip code or the neighborhood that you're looking in, and we will get that data set sent straight to your inbox. And if you're a home seller in today's marketplace and you're wondering, is now the right time to sell? Or what should I price my property at? You can go ahead and text the word data plus your property address, and we'll send that information straight to your inbox. All right, so let's dive into the data. If you're watching this video for the first time or you're new to these graphs, what you'll see here are active inventory, which is represented by the light green line, versus pending sales represented by the red line, and green, dark green, which represents sold inventory. And so right now, what you can see is something that's a little concerning. It should be a little concerning if you're a home seller, which is essentially for the last 1, 2, 3, 4 months, we've had a steady decline in pending sales. So we had that apex there in April of this year, 76 homes pending. And right now we're sitting right at about 49 homes pending. Now, good news or something that could be seen as good news is that we're starting to see stability in the marketplace. Now, generally speaking, in the month of July, we see a dip in pending sales. And so the fact that pending sales didn't dip any more than they had in June is a positive sign. And by no means are we anywhere close to being in a neutral market. A seller's market per economist standards would be anything above a 33.3% absorption rate. So we are still far away from that. In fact, in order to get to a 33.3% absorption rate, you'd have to see pendings be somewhere around 18 to 19. So we're still far away from that. Pending sales would have to be cut by more than half. And so there's still plenty of buffer in the marketplace, and it's still quite the seller's market in Menlo Park right now. One thing that many buyers might be asking themselves right now is, how much over list price will I have to pay in order to win the house? And so on average in the month of July, we saw homes sell for 101% sales price to list price ratio, which means that a home that was listed for $3 million sold for $3,030,000. Now, of course, that's on average, and there are still plenty of properties that are selling for way above that, and still plenty of properties that are selling for way below. If you've got the shiny or the perfect house on the perfect street with the perfect schools and the shiny, brass knobs, shiny gold knobs, whatever, that home is going to sell for way more than 101% sales price to list price. Of course, that being said, when you look at what's happened in that marketplace in Menlo Park, we've seen 6 straight months where the sales price to list price ratio has been above 100%. And so that type of compounding growth definitely means that the market is continuing to build upon itself, and we're seeing equity being built into the marketplace. And so if you ask yourself, well, how much longer can this last? The answer is that when you look at what is happening in Menlo right now, I don't anticipate, just based on the trajectory, us seeing a slowdown in Menlo Park until maybe after 2021 is over. And of course, that all remains to be seen. If pending sales start to creep back up, or if we start to see inventory levels drop, it could be a way longer waiting period than 3 months to see stability back into the marketplace. And by that same token, if we start to see pending sales dip even more and we start to see inventory levels rise, or one of the two, then it could be, 3 to 6 months and we're in a very, very neutral and or maybe even a buyer's market. But again, that won't happen in just 1 month. It won't just happen in 2 months. We will see telltale signs of steady growth and or decline that will be represented by pending sales and or inventory levels. And so that's why you tune back into the Bay Area Housing Market Minute every single month, so that you can continue to stay up to date with what's going on in real time in Menlo Park and every other city in the Bay Area. Until next time, everyone, this is Danny Gold from Selling Silicon Valley. I'll catch all of you in the next video.